So we can see here where the biggest increases in revenue occurred. Of course, that's going to be June, July, and August. We do see a year-over-year improvement for most of the other months as well. Overall revenue increasing for even the slowest months of November, December, January, February. And even March, as of right now, the month isn't even over. We're quickly coming up to the total of where we were at for March of 2024.
Welcome to RevLabs by PriceLabs.
Hi, everyone. Welcome to another episode of RevLabs by PriceLabs. Today, we're going to be doing a deep dive into Myrtle Beach, which is quite a large market. We're going to be dividing it up into Myrtle Beach proper as well as North Myrtle Beach. We'll kind of be comparing those things side by side, so you can see how the two markets are doing compared to one another. As always, we like to start these with just a general overview of the market in general. So in the US, you're looking at PriceLabs' short-term rental index. We can see that over the last several years, the number of listings has increased over year over year consistently. We are not quite seeing as big of a jump as we did from 2022 to 2023, but there was a rise between 2023 to 2024, and we are finalizing the data from January, and it does look like that trend is going to continue to this year, given that January is already beating the number of listings active in the US for 2025. In terms of occupancy, 2024 did end overall behind our peak of occupancy back in 2021. Of course, that's the COVID boom. Things have really neutralized and leveled out since then. The good news is that even though occupancy has come down and started to level off from its peak, ADRs have consistently gone up. You can actually see that for 2024, ADR almost every single month in the US has outperformed ADR from the year prior. When we look at RevPAR, based on the entire US market, paints a little bit of a different picture. Of course, we always take this information with a grain of salt because trends throughout the entire country may not necessarily be applicable to your market. Different seasons have different peaks, but we can still see that short-term rental, vacation rental, demand and performance is still strong overall in the US. If we drill down further and take a look at South Carolina in general, we do get a better idea of the seasonality curve. We can see that South Carolina as a state is highly influenced by the peak in summer. But again, this doesn't tell the full story of Myrtle Beach. It's just helpful to note kind of as a benchmark as we dive in further. So with that being said, let's start actually jumping into Myrtle Beach proper is what we're going to start with, and then we'll go over to North Myrtle Beach. A quick market overview here. Revenue year over year has increased, and we are seeing a 21% jump in the revenue over the last 365 days compared to the year prior. When we look at North Myrtle Beach, we are also seeing an increase in revenue. Both markets have seen an increase in active listings. North Myrtle Beach saw an increase of nearly 1,000 listings year over year. Myrtle Beach proper actually saw a pretty significant jump in listings year over year. Over 2,250 listings added from the last 365 days compared to the 365 days before that. So really useful to know. One thing that I will note when we're taking a look at Myrtle Beach proper versus North Myrtle Beach is when we're looking at all of these averages, we do want to keep in mind that the data might be skewed a little bit from one market to another because Myrtle Beach is primarily smaller bedroom units, which could be bringing the overall revenue as well as the overall RevPAR down and the overall ADR. I can actually show you very quickly, right below here. Here's our unit breakdown for Myrtle Beach proper. You can see that the largest number of listings fall within the studio, 1-bedroom, and 2-bedroom unit counts. We even have a significant number of rooms available for rent. But then once we pass 3 bedrooms, that listing count really starts to go down. In comparison, the number of listings based on bedroom count in North Myrtle Beach is skewed towards the higher end. So we actually see the largest number of listings here in the 2 and 3 bedroom count. So that's, of course, going to skew the data and the averages to be a little bit higher than what we're going to see in Myrtle Beach. So just keep that in mind as we run through these numbers. All right, jumping back up to the KPIs for both of these markets. ADR for both markets has increased about 12%. We are looking at an increase of ADR, $24 to $214 per night in Myrtle Beach proper, and an increase to $322, or an increase of $34 overall for North Myrtle Beach. So both markets increasing about 12% in ADR. Something else important to note is the number of bookings in Myrtle Beach proper has nearly doubled. So 100+% increase in the total number of bookings made in this market. So there is high demand in this market for vacation rentals. Number of bookings also increased by about 31% for North Myrtle Beach. Obviously, that's not quite as high as it is for Myrtle Beach proper, but that's still a really significant improvement year over year to the number of bookings that are made. I already went over revenue overall, but RevPAR is also up in both markets. We're up to 182 RevPAR in North Myrtle Beach and about 120 in Myrtle Beach proper. Occupancy remains about the same across both markets. A little bit of an improvement year over year when it comes to Myrtle Beach proper, and a ever so slight decrease in North Myrtle Beach. When we're looking at booking window remains short in Myrtle Beach proper, 22 days. When we look at booking window for North Myrtle Beach, booking window goes up slightly to 37 days. Again, this is something that can be influenced by the size of the homes or units that we're looking at in the market. Larger bedroom count units typically have a longer booking window because of the coordination required into getting those groups together to plan their vacations. So do keep that in mind when we start talking about length of stays, lead times, things of that sort. If we go down a little bit here, our AI insights within each dashboard is really useful if you're using market dashboards, because this will really quickly analyze the data and just kind of give you the high points. We actually see that the median booking window in the high season for North Myrtle Beach is 57 days. So definitely longer, again, influenced by larger bedroom homes. In the low season, it's about 17 days. What's interesting is that that low season booking window is the same for Myrtle Beach proper, about 17.5 days in the low season. In the high season, it's about 25 days in Myrtle Beach proper. So hopefully that gives you a little bit of big picture when it comes to the KPIs in the market. Let's dive into our overall monthly trends. So we can see here where the biggest increases in revenue occurred. Of course, that's going to be June, July, and August. We do see a year-over-year improvement for most of the other months as well. Overall revenue increasing for even the slowest months of November, December, January, February. And even March, as of right now, the month isn't even over. We're quickly coming up to the total of where we were at for March of 2024. March of 2024, average revenue per listing was about $2,400. We're already at $2,300 for this month. So we still have about 2 weeks left in the month. I'm recording this on March 13th of 2025. So we still have some time to make up for that. So I would assume that that number is going to surpass our total revenue from last year. Occupancy, again, you can really clearly see where the high seasons are here, but there's certainly something to be said for these shoulder seasons on either side. Shoulder season for March, April, and May. I'm sorry, I'm looking at RevPAR. Maybe edit that. Looking at RevPAR, we can very easily see that this is where the high season is. Again, this is just taking a look at that revenue and the occupancy. Occupancy looks pretty good, especially for a market that's so seasonal. We're looking at low occupancy here for November, December, January. But this year, or the last 2024 to 2025, outperformed the years prior. So there's definitely starting to become more opportunity in those shoulder seasons. Again, we look at the final picture here with the RevPAR, and we can see how year over year there's been improvements to all of these metrics. Jumping down to look at booking window, what's interesting is that booking window did decrease year over year. So even though all the other metrics improved, the booking window has gotten shorter for Myrtle Beach proper. We were looking at the longest booking window of about 29 to 30 nights in June and July of 2023, whereas last year we decreased to about 23 and 22 nights respectively. So we would expect that this number for March is going to start decreasing as the month comes to a close. Last year, March ended with a 19-day booking window. Wouldn't be surprised if March ends up at 19 days again or lower. Other shoulder season months, the booking window actually came up compared to the years prior. So I'm really keen to see how this ends up playing out, because that will obviously influence your strategy as a revenue manager, as a property manager, when it comes to setting those off-season rates and trying to get those snowbirds or maybe, week-long getaways in the off-season to come to your home. We can see that length of stays pretty much remains steady throughout the year of around 3 nights. October and November, September and October actually have the shortest length of stay of only 2 nights, which is interesting because we don't, Yeah, it definitely looks like people are looking for those shorter stays in September and October, even though the lead times are about the same as the other shoulder season months. October's slightly longer, so just keep that in mind when setting those minimum stay restrictions. Let's take a look at North Myrtle Beach. All right, again, very clear picture here where we can see that summer months are the highest performers. Shoulder seasons actually don't look as strong in this market of North Myrtle Beach. Could be influenced by the kind of listings that are available during this time period, the types of people that are traveling. Looking at overall revenue for the shoulder season actually seems to be right around the same as what it was for the year prior. So not quite as much of improvement there as there was in Myrtle Beach proper. Occupancy seems to have come down in North Myrtle Beach in your shoulder seasons. Slightly down in the month of July when we're looking at 2023 to 2024, but we're only talking about a 3-point difference. So August is the same year over year. June is roughly the same. May is the same. So summer is very stable here, we can see. Shoulder season might feel a little bit more of that seasonality. We can see how the RevPAR evolves here. Definite, again, clear differences in the performance between summer and shoulder season, but you probably didn't need me to tell you that. When we come look at the booking window, again, in this market, lead times have gone down even for peak season. We're looking at roughly a 10+ night reduction in lead time for those peak months. About 6 or 7 nights for May, 7 nights in August. So again, nothing really surprising here. What stands out to me here is that North Myrtle Beach can still get some longer stays in the peak season on average. So we're looking at a 5-night average for last year for June and July and a 4-night average for August, whereas what we saw in Myrtle Beach proper was just kind of like 3 across the board. So you can still get some longer stays as long as you've got your minimum stay strategy set up properly to attract those reservations within the typical booking window. So keeping that booking window in mind. Everything that I'm talking about today, and I should have said this in the beginning, everything that I'm talking about today, go over this yourself. If you're using our market dashboards, make a custom comp set to really look at apples to apples comparisons of your listing to the market. Right now, I'm looking at a very broad market sample of all bedroom counts. So we actually might see even starker differences between if we narrowed it down to, the small bedroom homes versus the large bedroom homes. Let's actually jump down now to future price and occupancy trends, because this is really what we want to pay attention. That way you can optimize your pricing and your length of stays. So looking at Myrtle Beach proper, this red line here is showing us where the market sits at occupancy-wise as of today. The gray dotted line shows me where the occupancy was as of today last year. So there are some very clear areas in this market where we are pacing ahead occupancy-wise, and there's 1 or 2 areas where we're pacing behind. So let's dive into that further. This upcoming weekend, pacing ahead. I know it is St. Patrick's Day on Monday. Maybe that influences it for some people, maybe not. But this year, we're going to be ending ahead occupancy-wise for the second weekend in March. Even the following week, which is interesting to me, is that we're also pacing ahead by an actually even greater amount. We're pacing ahead 10% here. It could be influenced by spring break. If I had to guess, that's most likely it. It could be influenced by good weather, things of that nature. But when we get outside of the next 2 weeks, we do start pacing behind. So looking here, last week of March, we really start pacing behind, but really not by that much. So the third weekend in March, we're slightly ahead. After that, we start pacing slightly behind. First week of April, we are really pacing behind. That's where the biggest difference is here. Again, this could be due to a shift in when spring breaks occurred for both college and grade school and high school. Could be weather driven. What I'm actually seeing here is we're pacing way ahead outside of that, though. And that's not just for the short term, next 60-day forecast, but when we start looking at the end of May into June, we're pacing pretty well ahead of where we were last year. Easter falls on April 20th. So the week leading up to Easter is significantly up in occupancy. That could be influenced by the holiday. The week after Easter is also up in occupancy, not quite as drastically as this spot here. But it does seem that Easter week before and Easter week after are having an effect on the market. We're actually also seeing an increase for Memorial Day. So Memorial Day is already pacing ahead by roughly 10%. But even the weekends before Memorial Day are starting to pace slightly ahead. So this is a great sign overall for the market. Again, I would encourage you to drill down further and look at this chart using a custom comp set, or at least narrowing it down by using the bedroom count slider up here to look at similar listings. Looking into summer, like I said, June is already pacing ahead. July is pacing ahead. Let's see, here's July 4th, which happens to fall on a Friday this year. So we're pacing significantly ahead there. And then that's probably influencing, the week before and the week after, depending on when people want to take their vacations for the 4th of July holiday. In another market analysis I saw the same thing here for both Easter and 4th of July, where the week before and the week after were being influenced by the holiday, where some people were taking off the week before, some people were extending the vacations into the following week. But again, when we get outside of that, we're still pacing ahead for summer. So this is great news for Myrtle Beach. Let's actually jump into the future prices here for the market, and then we'll go over to North Myrtle Beach and take a look at their future occupancy and their pricing. So I've zoomed in a little bit here because the data outside of, I thought I zoomed in. I will zoom in again right now. The data outside of October is really going to be a little noisy because that's really going to be going into the slow season for Myrtle Beach, and we probably don't have a ton of data in terms of bookings on or revenue on the books yet. But we can really clearly see how summer pricing does start to come up. There must be an event going on here because we're seeing significant increases to advertised pricing for September 26th and 27th. We see that spike here. We also see a spike in the median booked price. So make sure to pay attention for that weekend. Occupancy wise, where are we at for that weekend? Not a huge spike in occupancy yet. So there must be something going on here. You know this market. If you're a property manager there, maybe there's an event that I'm unaware of. But pay attention. Maybe there's an opportunity here for you to raise your prices. I would also say pay attention to the week before Easter and the week after Easter. It does look like in general, weekend prices, most people are keeping fairly stable for these weekends, even though it's a holiday week, but people are raising those prices during the week. So looking at the weekend before Easter, the weekend after Easter, compared to 2 weekends before and 2 weekends after, those weekend prices really seem roughly the same, but it's during the week where we can significantly see those prices start to jump. We're seeing a price increase spike for Memorial Day, makes sense. We're also seeing a spike for the beginning of June, maybe another event or holiday, or maybe another event happening here. A spike for 4th of July, all of this makes sense, but we can see that in general, both weekend pricing and weekday pricing does start to come up for the summer overall, and then starts to taper off again in August. So pay attention to where your prices are at for these time periods, in addition to what the average lead times are. I'll go over that in just a second. Let's take a look at how North Myrtle Beach is doing in terms of occupancy and pacing with pricing. Let me just zoom in here. All right. Future occupancy for North Myrtle Beach. Not quite as strong for the month of March, or the next 2 weeks at least, as we saw compared to Myrtle Beach proper, where we're pacing ahead. But for the upcoming weekend, we're still roughly ending on par with where we were last year. The weeks out ahead, or the week ahead, we're slightly behind on the weekdays. We're about 10% behind for the weekend. So I would expect that final occupancy, which I didn't add on the chart prior, but I can go back and do that. Yeah, I would expect that final occupancy for North Myrtle Beach for the end of March is going to end up significantly behind where it was last year. So looking at how far that red line is pacing behind the larger, or the more solid dotted gray line, is an indicator to me that we're probably going to end up behind for the end of March. But again, we are seeing signals that summer and the shoulder season leading into summer is off to a strong start. Easter week before, again, is pacing ahead in terms of the weekdays. Week after, let's see. So here's Easter. Week after, not as strong, but the weekend after Easter is also pacing ahead. So it looks like in this market, it's the week before Easter that you really want to pay attention to in terms of pricing. We've got Myrtle Beach pacing ahead here as well. So an opportunity to bring up your prices, potentially bring up your minimum stays there. And then through the summer, not quite as strong as some of the dates in Myrtle Beach proper. But again, in general, the theme is through August, at least beginning of August, occupancy is pacing ahead. One thing to note here is that towards the end of September through the month of October, we are starting to pace behind here in this market. So pay attention to what your pricing looks like there. There may be an opportunity for you to bring prices down sooner than you did last year, without having to do substantial drops to maintain as much revenue as you can, and still get the occupancy from whatever little demand is there. But again, create a custom comp set, see what the comps similar to you are doing, and then adjust your strategy accordingly. When it comes to prices, there are some spikes in prices. We're actually not seeing as much of a drastic difference through Easter and Easter week as we did in Myrtle Beach proper. We are seeing a spike for Memorial Day. We are seeing a spike for, I think this actually is Labor Day. Labor Day, I think, does fall on like September 1st this year. Yep, Monday, September 1st is Labor Day. So we are seeing people raise their prices for that weekend prior. Looks like people are actually dropping the prices for Sunday, August 31st. Maybe people don't realize that they can hold them higher because it's the 3-day weekend. So pay attention to that as you're looking over your pricing. We do see a slight increase here compared to the dates around it in terms of the median booked price. Again, I want to emphasize making sure that you are creating custom comp sets. That way you're doing real apples to apples comparisons of your listings versus the market. Let me jump back over to Myrtle Beach proper. I will add in that final occupancy last year. That way you can get an idea of where we were at. Same thing here, at least for the last week and a half of March, I wouldn't be surprised if we end up lower than where we were last year in terms of final occupancy, but you can actually see that for the weekdays. For weekday occupancy for next week has already exceeded where the final occupancy was for last year. These week dates here that are already pacing ahead, they're already pretty close to where the final occupancy was for the first week of April. So keep an eye on that pricing. There might be opportunity for you to get reservations for those weeks, even though it's the off season. Encouraging things like length of stay discounts. That's usually a good strategy to implement if you can. Trying to encourage those 3-night weekend stays. And if not, definitely 2-night minimums on the weekend to increase that occupancy, increase the revenue. If we come down here and we look at the last 365 days for the day of week or 360 days for the day of week occupancy, there actually is not a stark difference between weekdays and weekends. We're looking at about 20 to 25 point change. Actually, no, not even, sorry. Less than that, we're looking at like a 15-point change. Price factor. I would say that this makes sense. So people are keeping their prices fairly stable from weekdays to weekends over the last year. If we just look at the last 30 days, though, yeah. So in the off season, it's a slight difference, but weekend occupancy is the primary driver in the off season, it looks like. When we take a look at length of stay and booking window trends, this is going to give you an idea of how to set up your minimum stays. So it does look like if you want to maximize some of the longer stays, so those 7 to 14 night stays, the 5 to 6 night stays, and then even the 3 to 4 night stays, you want to start reducing that minimum stay 2 to 4 months out to try to encourage at least like not just a 2-night stay, but maybe you can get the 4 to 6 night stay, having your listings set up appropriately. You can see, though, that there are a significant number of bookings coming in for 1-night stays this far out. Let's take a look at this information. Day of week occupancy and day of week price factor for North Myrtle Beach are actually even more stable across the board than they are for Myrtle Beach proper. Okay, in this market, it's even more important, it looks like, that you get your minimum stay strategies set up appropriately, because if you want to get those week-long stays, you need to make sure that your pricing is set and your minimum stays are set 4 to 6 months out, because that's when it looks like most of these reservations are being made. Again, if you want to get into the 3 to 4 night stays or 5 to 6 night stays, optimizing that in the 2 to 4 month window and then the 1 to 2 month window. Far fewer single night stays in this market. All right, jumping down to amenities, it's quickly going to be the last thing I cover here. I do just want to show you where you can check what amenities are performing well in the PriceLabs dashboard. Some of these are kind of no-brainers. These are like the essential amenities that we automatically pull in from Airbnb, but something like waterfront, you can add into the comp set here in the drop-down and actually see how much of an impact that plays on homes being booked. So what this is telling me that in Myrtle Beach proper, about 56.5% of listings are waterfront, and they receive about 58.5% of the bookings. So they are in higher demand than what's available in the supply. Or put a different way, there's a 2% increase in the number of bookings that come in for listings that are waterfront. Again, you can dive further into the comp sets, or I'm sorry, the amenities that are here and see which ones are most impactful within your custom comp set. Waterfront, not as high in North Myrtle Beach as it is in Myrtle Beach proper, but we do see that only about 39% of listings have waterfront listed as an amenity, and they do get slightly larger share of bookings, about 1%, 1.2%. All right, so that was a quick deep dive into both Myrtle Beach and North Myrtle Beach. Again, you can come into PriceLabs and take a look at these market dashboards yourself at any time. Create those custom comp sets, really do, apples to apples comparisons for your units compared to the units around you. That way you're getting the most accurate data, but hopefully this gave you a little bit of insight into where to go from here and how to best prepare and optimize your pricing and your minimum stays through the rest of the summer, through the rest of the off season and as we get into summer. So thank you again for joining RevLabs by PriceLabs. We will see you again soon. Bye-bye.